Welcome to today's market report.
The US stocks are seeing opening mixed on Wednesday, with investors digesting the news of the passage of a $1 billion infrastructure bill while awaiting the latest consumer inflation data. Dow Jones futures was up 0.1%, while S&P 500 was down 0.1%. Nasdaq 100 futures dropped 0.1%. The blue chip Dow Jones Industrial Average gained just over 0.5% on Tuesday, while the broad-based S&P 500 advanced 0.1%, both closing at record highs. The tech-heavy Nasdaq Composite slid 0.5%, registering its second negative session in the last three. Investors will be holding their breath on Wednesday ahead of the release of the Consumer Price Index for July, as this could cause them to update their thinking as to when the US Federal Reserve will begin scaling back its $120 billion monthly bond buying program. The data is due at 1:30 p.m. London time, and analysts are looking for a gain in the headline figure of 5.3% over last year, marginally lower than June's 5.4%, which was the biggest monthly gain since August 2008. Also of interest will be the news that the Senate has approved the framework for the Democrats' controversial $3.5 trillion spending plan. This follows the passing of the $1 trillion infrastructure package, which is set to result in substantial investment in roads, bridges, airports, and waterways. The second quarter corporate earnings season is drawing to a close, and it has been a generally positive one, with around 90% of the S&P 500 companies that reported results beating expectations. Wendy's and Canada Goose are set to report before the opening bell on Wednesday, while Lordstown Motors and eBay are due after the close. Oil prices weakened, continuing to be weighed by the COVID-induced restrictions in China, the second largest consumer in the world, even amid signs of continued healthy US demand. Prices were also pressured lower following reports that the White House will call on OPEC to pump more in order to rein in rising gasoline prices. The US crude futures were down 1.3% at $67.39 per barrel. Brent futures dropped 1.3% at $69.75 per barrel. Gold futures was up 1.24% at $1,753.25 per ounce. On the FX front, GBP/USD is extending the bearish momentum into the fourth straight session, and this Wednesday, the cable refreshed a two-week low the previous day as broad US dollar strength exerts additional downside pressure on the quote, other than the COVID and Brexit-led woes. In the reviews of analysts at OCBC Bank, the cable risks a drop to the 200-day moving average around 137.70 level. The Bank of England last week made a departure from the extreme dovish stance, but still shows that it is not in a hurry to tighten. This marginal shift is likely not to register amid a stronger lean at the Fed and other hawkish central banks. Likely to see a top for the pair at 140 for now, with the resistance moving lower to 139, says the bank. The immediate downside target may be the 200-day moving average. Commerzbank allows for a slump to the 135.71 July lows as long as the cable trades below the 140.18 mark. GBP/USD, while capped by the 140.18 pivot, the market maintains a negative bias. Intraday dips lower are likely to find some support around 138. Initial support is the 137.86, the 21st June low ahead of the 137.35, the 2nd of July low. The UK government hinted to extend the emergency powers for trucks heading into France in a move to use Brexit rights, signalling the government expects further cross-channel disruption. According to Guardian, it's worth noting the British accord to give the Gover saltmarsh lamb a protected status also indicates Brexit jitters. The UK's COVID-19 death toll unfortunately jumped to the highest in 5 months, challenging the government's efforts to tame the pandemic, and claims that 75% of the British population is double jabbed. To overcome the criticism, Boris Johnson-led army orders more Pfizer vaccines. Eurodollar is close to potential support of 117, representing the low of March. Below 117, next projections are located at 116, as economists at Societe Generale note. The dollar strengthened in early European trading session, extending recent gains ahead of US inflation data, which could influence Fed's tapering thinking. The dollar index traded around 0.1% higher at 93.097, hitting its highest level since the start of April.
This is today's market news. Thanks for listening. We'll see you next time.